welcome, welcome, welcome to another edition of Money Making Mondays.
Money
Woo!
Making Mondays.
Yes, yes.
Good morning.
And
Good morning.
today, in particular, this Monday, is the day people can start filing taxes. So it only makes sense that we will dig
Mm,
into solutions and helpful information tidbits as we make another journey into tax season and tax preparation and all of that. So I'm excited to have that conversation. For those of you all
awesome.
who are joining us for the first time, or for those of you who are part of our community, I am Quintaria Brunson here with Mercedes Coates. I am the owner of a financial strategy company called the Brunson Approach. We specialize in helping entrepreneurs in particular and serious individuals overall with coming up with financial strategies to build legacy, to have the legacy that they desire, using such vehicles as real estate, lifetime income solutions, the sale and transfer of purchasing businesses and franchising. Pretty much our firm helps business owners, and like I said, for those who are just serious about wealth creation, to come up with solutions using strategies that best fit their goals and their needs. I am super excited to be partnered with my friend and colleague and my yin yang,
Ditto.
Eddie Colt. I'll let her introduce herself and tell you about the fabulous her experience and her contribution to this conversation as well.
Yes, good morning. Good morning.
Good
Tax season
morning.
is upon us. I'm Mercedes Coates. As most of you guys know who have been watching me, I'm like super bubbly. Like, I love people. I do. My experience is 12 plus years in the financial services industry. I specialize in living benefits insurance, retirement planning, child's legacy planning, anything that has to do with transference of wealth. That's what I do. Myself and my husband as well. Sometimes I forget to mention him because he's on the back end. But
He matters, honey. That's the part
he,
that is one of the
he
things that
matters.
keeps us wealthy is
Yes.
those partnerships, honey. That's a
He,
whole nother
he's on the
conversation.
back end. Trust and believe he does his thing. But
Yeah.
I am on the front end. I'm typically on the face. But we love people, and we've always been very adamant about learning concepts, learning what was the difference between the average and ordinary individual, right? How do you accumulate wealth and not only accumulate it, but keep it, right? A lot of people get inheritances and they can lose it to taxes.
Mm-hmm.
Lots of money to taxes because you don't understand the tax laws, or you don't understand what financial products are available for you to minimize your tax. Pay your tax because it's a good thing. I know Quintaria going to talk about it,
Yeah.
right? It's
Yeah.
a part of our function as Americans, right? But ultimately, as well, be able to pass on tax-free income is another strategy we're going to discuss as well. Okay.
Yeah.
Thank
Pay
you.
your portion. Like
Yes.
when it comes to taxes, you pay what is due and
Mhm.
what you owe. If you want to just give money, there are plenty of charities that could use
Yes.
your services. Matter of fact, if needed, I can start one today and use the money that if you have additional money that does not need to be like applied towards the payment of taxes. So the goal isn't to have people come up with these deviant ways to
Mhm.
avoid paying taxes. The goal is to pay what you owe, but
Mhm.
you need to understand that. As always, I'm going to kick out a quote that I hope will help our mindsets prepare for this wonderful conversation that we have in store. And this quote is: money is a terrible master, but an excellent servant. And
Mhm.
that's by P.T. Barnum. And I think that really speaks volumes because one, depending on how you were raised or whatever, you may have been taught that money's the lead of all evil, or all
Mhm.
of these things. And that's if you allow it to be. So just knowing that as money as your master has certain implications, but learning how to money can serve you and
Yeah.
money can serve your family, your community, and your legacy. That's a beautiful thing. That's
Yes,
a
it is.
wonderful thing to learn how money can serve us. So I want money to serve me and to serve my community. We need money. Money is very helpful in order to accomplish things and to be a blessing to others.
Yes.
So I'm excited to dig in today on ways that we can be more aware and more just smart and savvy when it comes to preparing for taxes. I'm gonna say a few things, and I know that Mercedes is our, like presenter. Like I'm a little.
Oh, you are definitely the presenter. Stop it.
But you are so much better at formally presenting me. I have like conversations and I get passionate and I'm on a Jesse.
Y'all hear her?
I have a dream speech. Like power to the people, we must unite and come together, but you always have cute little slides and all of that type of stuff. So but one thing I will say is so tax season 2024 is open, and we are able to submit our tax returns if you have all of your documents. Speaking of the documents, if you are business owners, know that if you had W-2 employees or individuals that you paid over $600 or more that qualify for a 1099, you must get those forms out by the 31st, by January 31st of 2024. Yeah. You don't want to miss those deadlines. Like I can't emphasize that enough. You don't want to miss those deadlines because there are penalties when you do. So first and foremost, welcome to tax season. Don't miss the deadlines.
Don't miss
it. But then to just some general housekeeping for tax season. And I say this just to back up because maybe everyone doesn't. I told you what I do now, but I have a degree in accounting, was an accountant, and did books for about 7 or 8 years. Didn't go on to get my CPA because the broader strategy, and not just like, we're missing 10 cents. We got to shut everything down to find a dime. Like that wasn't necessarily my thing, but I love understanding the tax code because it is so beneficial in helping you to pay what you owe in taxes and to continue to grow a legacy. But I will say some of the things that I see with the individuals that I still prepare their taxes for, and just what I saw in the nearly a decade of years that I was doing personal taxes for individuals and corporate taxes. The number one thing is, like I mentioned, knowing deadlines, when you can file, when things are due, like what the deadlines are. They have general start and end dates, but you want to know the specific dates, number one. Number two is understanding how you're filing. If you are, and this is just one example, but I see it so often. If you are married, you should not file single or head of household in most circumstances. And I see a lot of people improperly selecting their filing status, and it can have, and although you may make it through for a year, make it through for 2 years, if ever your audit, that is a huge issue. And more often than not, I don't want to make assumptions on this particular conversation that we're having, but make sure you're filing properly. Look at if you're selecting head of household, make sure you meet those criteria. If you're married and you want to file your taxes separately, that is married filing separately in most cases. But make sure you understand how you are filing and why you are filing that way. For this year, the standard deductions, if you're not doing itemized deductions, meaning that you want to dismiss what the government is allocating, the government is allocating, it's $14,600 for single and head of household individuals, and for married couples, married filing jointly, not separately, but married filing jointly for this year, it's almost $30,000. It's $29,200 in your standard deduction. So if your medical expenses, your interest on your mortgage, if they don't add up to over those, the standard deduction is probably the best deduction for you to take. And I won't go too much into that. If you have tax professionals, seek them out. If you would like more information, or for me to help you or give you more tips one-on-one, you can definitely dig in. But today I want us to kind of dig into the overall concept of taxes and what's taxable and what isn't as we prepare. Last thing that I just got to say, because
It's
we
always good. We here. We ready.
we are a wealth building platform.
Yes.
Our community needs more intentional wealth.
Yep.
And I say this out of love. And I say this being someone who was on this side and moved to the other side. But the goal is not a tax refund. If you are still in position where you're receiving tax refunds, that's wonderful. Like if that's where you are today, take that refund and be thoughtful. Mercedes and I, on many different money making Mondays in the past, have given so many options on things that when you get a lump sum of money, things that you can do with that. So be intentional with that. But the goal is to get to a point where your income has accrued to the point where you are a taxpayer, where you are not anticipating a refund in the fact that you filled out your taxes and the government's giving you 5,000 back or 2,500 back or whatever, in that sense. But we want to come up with strategies and solutions so that our wealth and our income grows to a point that we know we're going to have to pay, but it's because we've earned so much that we can now use some of these resources and concepts that Mercedes is going to dig deeper in, so that we can pay what we owe when it comes to taxes, but leverage and grow so that we can plant trees and opportunities and leverage wealth in a way that the rich and the wealthy do it. So I needed to say that, because it's a certain demographic. It's a certain demographic that they become complacent with every year getting a refund. And I was a refund recipient. I was a single parent. I had kids. And up to a certain point, like by the time they were in middle school and high school, I started to have to pay because my income began to shift to a point. And for the first couple of years, I was kind of resentful. I'm looking to the left, looking to the right, and I'm like, they getting refunds still, and but I had to understand it is a blessing. It is an honor to have to determine how much will I have to pay in tax, and because that means you are earning to the point that now you are a true competitor. Now you can access certain loans and other income assets that would not be available to you if you're still in that bracket. So because this is a wealth and growing platform, I could not say that. If you're getting a refund, cool. Like, talk to Mercedes and I on ways that you can leverage that, so that this is the last year that you're getting a refund in terms of a rebate. But we want to have enough wealth that, it's like, I pay my tax.
Agree.
Because I made enough that
that's it. And listen, the quality of life increases too, guys. I mean, literally, when you become a true taxpayer and you're not expecting a refund, honestly, sometimes lifestyle is a little different. There's not as much stress, of trying to pay for things because your income has increased. So you're not worried about that. It's more so now about, how can we write this off? Okay, this is falling into this category to take a deduction, but like Quintaria said, moving from that mindset, the traditional mindset of getting that refund, and now shifting into a wealth building mindset, that's what we're here to talk about today. Okay.
Yep.
So let's get started. Thanks for sharing all that wonderful information. Hope you guys took some notes. If not, rewind, go back, once everything gets posted. Or drop some, comments below if you have any questions. That's what we'll drop some comments. We'll answer them. Hit us in the DM, or again, just book a consultation.
Yep.
So let's get started. I'm going to go ahead and share my screen. Let's see. Oh, it looks like I'm already sharing. Hold on. Stop. Share my screen. Okay.
Boom. Something's happening.
Something is happening. Let's see.
See, the information she has for y'all is so powerful, it's blocking up the airway.
Funny.
It's blocking the airways, Mercedes. You can't even take it all the way.
Can you see it okay?
Yep, I can see
Okay,
it.
perfect. So let's get started, guys. So we are taxpayers. I'm talking to my taxpayers today, right? The question that I always tell you guys to ask yourself, do you want to pay your taxes now or do you want to pay them later? Okay. That's going to be the true question, because paying them now means that you're going to pay taxes on the smaller amount, your actual contributions. That way you can actually enjoy the fruits of what it grows to be, your harvest. But if you pay your taxes later, if you so decide to, what happens is your principal plus your interest that your account has grown to, your full portfolio now has to be taxed. So the question will be, do you pay it now on the small contributions, or do you wait until your harvest and let Uncle Sam take his portion then?
Yeah. And that is so, I love this visual, because sometimes we're so inundated with tax defer, and tax vehicles that allow us to defer taxes. In some instances, it makes sense. But the fact that across the board, most people just think that as a blanket, tax deferred is a good thing. I love that visual, because it kind of reminds you that like it may not be, is it a good solution for me and my family and my tax circumstances in this moment, and where you're saving and harvesting your money as well too. All of these are things that we need to consider and think about, and conversations we need to have with our tax professionals as well.
Absolutely. So I'm going to go back to something separate. So I want to talk about the different ways you can save. And you can see that, okay, right? So there's different places you can put your money. I know a lot of people are like, I just really don't know what to do. This person is telling me to do this. I just started this new job. I'm signing up for these benefits. I really don't even know what I'm signing up for. I just hear people talking about get a 401k, get into the TSP account, go aggressive, go moderate. It can all be a little overwhelming. So I'm going to break it down into just 4 topics for you guys to keep it very simple.
Gotcha. So you may have to reshare because it went away.
It did. Okay, let's see. Hold on. Let's see.
I told y'all that when it comes to these powerful topics, it can't even make it all the way through the airways, honey. Okay, it looks like it's bad. Okay, boom.
You see everything?
Yep.
Perfect. All right, so we're going to dive into the 4 different topics. So the first place you can save and put your money is in what we call after-tax accounts. So after-tax accounts essentially are, and I'm just going to use a W-2 employee. Before you get your check, our favorite uncle, he already got his cut, right? That money that you're netting after the taxes have already been taken out, you put it into an after-tax account like a CD, a savings account. Even mutual funds are considered after-tax accounts. This just means that you can put it in this account. It can earn some type of interest, but any interest that you accumulate on that particular account, you have to pay taxes again. So Quintaria, you know what I like to call this? Double taxed accounts. They're getting you first before you get your check, and they're getting you after any interest that you accumulate.
Boom.
Okay. The second place you can put your money, and these kind of go together, tax deferred and pre-tax. Tax deferred, when you hear that term, guys, it just means simply that you're delaying the tax until you go to retire. That's all that means. Tax deferred, you're delaying when you retire. So you're able to take those deductions. I think it's up to $19,000 now for a single person that you can contribute. I don't know the new numbers for 2024, but I believe it's probably gone up to about 19,000.
It's somewhere in the ballpark.
Yeah. So that means that you can deduct that on your taxes. I am not a tax professional. I'm just giving you the rates based off the IRS, right? So you can delay the taxes. You can use annuities. Annuities are designed to help you save for retirement. That is what they are for. Okay. Including pre-tax accounts. Pre-tax accounts meaning you're getting your initial pay. Before you get your pay, they're going to take out money pre-tax and put it into a traditional IRA, 401k plan, or TSP plan if you're with the government. So that money, you never even see it hit your check because it's going directly from the company's money into that retirement
Into
account.
an account.
Okay, that makes sense. Then you get your net pay. So we call that pre-tax because you have not been taxed on that money yet. So you may see your account, you may open it up and look at it and say, hey, I got $1 million. Great. However, remember this, when you go to retire, you haven't paid taxes. So remember that harvest we talked about, Quintaria?
Mm-hmm.
That harvest is what your portfolio has grown to be. So now you have to pay the tax.
Yes.
Okay.
And for $1 million, I work with high earners all the time. If you have $1 million in untaxed money, it is probably around 625,000.
Yep.
Just know.
And
So
that's today.
and thank you. You
That's
took the
the
next
key.
thought out of my head. Yeah.
Yes.
So if you have $1 million today, somewhere in a pre-tax where it has not been taxed yet, you have somewhere around 620,000 of that after you pay your taxes, and that's today. So that goes back to that visual of, do you want to pay today so that you know what the tax rates are, or do you want to wait and see what the tax rates will be in the future? Because if it's about 625,000 that you would have today, 20 years from now, when you're ready to take it out, do you think
we
it'll
don't
be
know
more
what
or
it's
less?
going to be?
Yeah, you really don't know. But I'm not crossing my fingers to think that with the national debt the way that it is, and our uncle doing what he does, I would venture to say that we are more likely to increase in taxes than decrease.
Yeah. And essentially, guys, it's up to you to make the decision on which account you want to use. The key is to be informed, to be educated on what your options are, right?
Yep.
So again, that gray area, that ambiguity, you really don't know what tax bracket we're going to fall in. Even Quintaria, I don't know if you knew, but in the 1970s, the tax rate, the highest tax bracket was up to 90% in the 70s. Meaning if you made $1, 90%, 90 cents of that went to the government.
Yeah.
Right now we're currently,
No, I was just going to say, a lot of these like IRAs that people are familiar with, Roth and all of that, they were senators in the 70s. And a lot of these incentives were to figure out ways to pull more of the American dollars so that the government could have access to that. So, and I won't say whether that's good or bad, but like you said, this platform is to inform. Yes. So the more information you have, you can make decisions based upon that. But they were not things, they didn't say like, you know what, how do we help the people more? They said, we're running low on tax dollars. What are some creative ways that we can have access to more money so that the government can do what they need to do? And you just need to know that. And it was all around that time where inflation was astronomically out of control. People were demanding that something be done. So it's another game of smoke and mirrors. And that kind of is what it is. But you need to know what was the facts, why were some of these plans put in place, and not just assume, like I said earlier in this conversation, that just because everybody's doing it, it's a good fit for everyone and it was designed for your benefit. Because sometimes things that weren't designed for our benefit, you can benefit from, but not if you're ignorant and you don't understand the complexities and what really is happening with your money.
Yeah, I completely agree with that. I mean, a lot of my peers today, they say, oh my goodness, Mercedes, I do not want to work until I'm 70. I don't want to do that. I see it around me all day. And this is why I tell them, I said, listen, get educated on how and where you can put your money. Because that's
Mm-hmm.
the key. If you don't want to do it, you have to be proactive. So this is again that call, for you guys to take initiative to learn about these things and make your moves, create the strategy, work with a financial professional. Okay.
Yeah.
So just to kind of get back to it, just to wrap up the last two. So again, guys, pre-tax, remember you are leaving yourself open to whatever tax rates is going to be at the time you go to retire. So just keep that in mind. And this is where you can come in and say, hey, I do need to add a tax-free portion to my portfolio. And when it comes to tax-free, this just means that when your account is building, whether it's a Roth IRA or permanent life insurance, any of the interest that is accumulating in that account will be completely tax free to you. That means that you don't have to pay the government. You already paid the money on that small amount we talked about, that seed. That's that tax free. You did your due diligence. You paid it on a small amount. That way, when your harvest comes, you keep it all. That's your bucket now, and no one else's. So that's the difference between the two. Roth IRA is capped. Quintaria, a lot of people don't know it's capped. I have
Mm-hmm.
people who are high income earners above 140,000. You cannot use a
You can't
Roth
even.
if you're
Yep.
you can't use it because there is a limit, an income limit. So places like permanent life insurance has no cap on what you can accumulate. It based on your annual income, it doesn't matter because life insurance has the tax codes in it that allows you to uh, earn interest and take the money out completely tax free. You can put as much as you want into it. You can dump large lump sums of money in there and not have to pay taxes on it. Okay.
Yeah. Yeah.
So go ahead.
No, I just always get excited when we remind and show
Yeah,
people that you have options. I
you do.
always say, like the tax code is available and can be availed to every American citizen.
Mm-hmm.
Every tax-paying citizen can capitalize on the tax code. It is just that some demographics understand and they utilize it more, but you don't have to stay ignorant
Yep.
or in the dark, and you don't have to be the expert. Connect with individuals such as myself and Mercedes who are familiar and who can direct you and guide you so that you can come up with a winning strategy for yourself, your family, and build the legacy that you desire. Anytime you have the masses doing anything, I
Mm-hmm.
think that you should always have some level of caution or discretion or discern, knowing that if 100 people is going in that direction, you might just want to double check to make sure that that is truly the direction that you need to be going in, and if it works for you. Sometimes it may be, but more often than not, there are strategies and solutions that need to be put in place that
Yeah.
that could allow you to really win.
I agree. I agree. Just because everybody's buying that Stanley Cup doesn't mean you got to buy it too. Okay.
Yeah. 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 And
But
for the closeout,
mhm,
going back to what you said about like the decisions that we make, I just want to really
mhm.
hammer home about start where you are. If you
Yes.
are receiving a refund this year, that's okay. Put
Mhm,
a date on the calendar. You all can't see it, but I have a 20-year vision board behind me. And when, like year 7, I had a financial goal that I needed to meet. And so, and you can too. So if you're
mhm,
still receiving refunds and you're like, you know what, it may be 2 years before I get to the point that I'm out of that bracket and I'm on to the next tax bracket, start there. When it
mhm.
comes to like the Roth and all, if you qualify and you can save within a Roth and it makes sense within your financial strategy, that's cool. But be prepared for the time when you outgrow that. Because
Mhm.
again, this is a wealth building platform. When you outgrow that, then where else can we store our money and what can
Mhm.
be done with that? And, so it's just so many opportunities and so many ways for us to win. Plug in and start where you
Yep.
are. Have conversations with, like I said, individuals like myself and Mercedes that can help you build a strategic plan and a timeline so that where you are now will look different in a positive way, where
Yes.
5 years from now, and 5 years from now, where you'll be 10 years from there will look more positive and fruitful, so that we all have legacies where our future
Yeah.
generations are financially free and not financially frustrated.
Absolutely. One last tip I'll drop. Guys, listen, there is a major change that happened in the industry about a decade ago. There is one thing I think that people don't focus on, Quintaria. I don't hear them talking about post retirement.
Mm,
So we're living longer. Okay. So with living 30, 40 years in retirement, most people are going to run out of money. That's just
yeah.
it. Okay. How do we make sure that we can not run out of money and have stronger guarantees? But there was a major change in the industry. There are concepts now that we are aligned with that will pay you a guaranteed income for life
Mm,
that you cannot outlive. That can be structured on annuities, and it can also be structured on life insurance policies. So
that's
if
a
you're
beautiful
worried
thing.
about outliving your retirement, you started late or you started early and you didn't consider, or maybe now because of medical advances, maybe you'll live into your 90s or 100s. You want to make sure that your money doesn't run out. These strategies can be put in place for you in addition to what you already currently have.
And
That's what
that guaranteed income is a beautiful solution, because every time I think about having to, if I had to go back to work at 7, I will not be a happy Walmart greeter.
what
I'm
about
just
80,
telling you that,
85, a vibrant 85? You still don't want to go back to work.
thank you. I will be retired well before 65. So to
Yeah,
go back but you have to be prepared for it.
you
You
do.
have to be prepared. But the beauty is we
Mm-hmm.
can. With
Mm-hmm.
conversations like these, with
Yep.
products and financial vehicles like Mercedes and I continue to introduce you to and
Mm-hmm.
make you aware of, you don't have to be
That's
a
it.
greeter at Walmart. And no disrespect to greeters at Walmart. I'm just saying, if that is not, if you're not doing that because, like, you know what, I'll go back and because you want to, and it's because you
Mm-hmm.
have to,
Mm-hmm.
that's like
That's it's a
that's a
different
different,
story.
thank
Yeah.
you,
Yep.
that's a
So if you
different
have a
thing.
parent, an elder, an auntie, an uncle, somebody who is maybe considered like, oh my goodness, I may not have another 7, 8 years. We can reallocate the funds over to a plan that will pay them a guaranteed income, even where they are, even if they're currently retired now. So there are options. Book a consultation, find out what your options are, guys. Again, you have Legacy by Quintaria at the Brunson Approach. You have Mercedes Coates with Coatesway Financial. We look forward to hearing from you. So I
We
hope this
do.
conversation was helpful for you guys. And again, we always talk about being intentional and pulling that trigger and getting things in the process. So start with that consultation and we show you what strategies and what's made available for you.
That you said it so very well. I
Thank
feel
you.
like we can close it out on that.
That's it.
Happy tax season. Be
Yes.
smart, savvy, resourceful, and
Yes.
be cognizant that you are obligated to consider your own financial destination,
Yeah.
and you chart your journey. No
That's
one else, not even our uncle, should make that decision for you. We should
yes.
make those decisions for ourselves. I wish you all the best. I
Yes.
enjoyed today's conversation, and I
Mhm.
look forward to hearing from many of you in the meantime for consultations and just to learn more concepts and strategies so that you can have the legacy that you desire. I'll see you next Monday,
All
Mercedes.
right. Bye,
All righty.
guys. Thank you,
Bye-bye.
Quintaria.
Uh-huh.